Time for the market report. Prices rising.
That's right. Last week they rose, and we're going to be looking into that along with some farm tech. But first, the numbers. What were last week's biggest gains and losses? And then a closer look into the bullish cattle markets. And finally, MSU Extension economist Brian Mills talks to us about using new tech to help farm budgets. So, markets closed last Friday on the upswing with just a few exceptions, and they didn't fall much. Let's take a look. Last week's biggest gain, wheat, up 46 cents. That's an over 7% increase from the previous week. Last week's biggest loss, however, soybean oil, down over 1/4 cent, a 3/4% decrease from the previous week. So, live cattle prices the highest since March this year. Lower herd a big reason, as we've talked about, and several recent USDA reports give more context, starting with this month's cattle on feed. At the beginning of the month, cattle and calves on feed total about 11.5 million head, 1% down from last year. Placements in feedlots totaled 1.66 million head, down 6%. Marketings totaled over 1.75 million head, 10% up from last year. In the livestock slaughter report, beef production 11% up from last year, slaughter up 7%, and live weight up 41 pounds. With that context, what can we expect with cattle prices this year? MSU Extension livestock economist Josh Maple says looks like bullish prices in the future.
You know, we've started out this year at price levels we haven't seen in a decade. A lot of that run up happened at the end of 2023 and continued in the first couple of months of 2024, which were those pricing opportunities that producers took advantage of. We've leveled off a little bit the last month or a couple of weeks or so, depending on how you look at it. One thing to keep an eye on, beef packer margins are pretty tight and even negative in a lot of cases. So that is putting a little bit of pressure on where fed cattle prices can go. The box beef cutout it's at high levels, but it's probably not as high as a lot of people expected it to be. And so that's putting some strain on that particular sector and putting a bit of a lid on where fed cattle prices can go. And of course that filters back down into feeder cattle prices as well. So we've seen things level off a little bit, but overall still extremely optimistic on cattle prices. We haven't yet fully began expanding the cow herd yet. And until we do that, we're going to continue to talk about tighter and tighter supplies. And that's the boat that we're still in. So tighter supplies are leading to a lot of optimism in cattle market prices, expectations. And that's exactly where we are in 2024. So expecting these strong prices to continue and maybe even get stronger depending on when we do start expanding.
You've likely noticed lots of new ag technologies, and they have a name. Precision agriculture. But how do you make use of them? I spoke to MSU Extension economist Brian Mills, who specializes in this field, to help make sense of it and how it can help the producer.
So precision agriculture is these different technologies that allow producers to gain more information about what's going on in their farm. So this could be, grid soil sampling, which allows them to do a variable rate application from their fertilizer instead of, say, a uniform rate. So it's collecting more data, more information about their field, about their farm, that allows them to then become more efficient with their input use. So other things, soil moisture sensors, variable rate planning, these kind of things that allow them to gain more information, but then be more efficient in their production.
That's really neat and nice to see people incorporating these new technologies. I'm sure they, though, come with challenges. What are those challenges?
So kind of the big challenges is that, one, there's a lot of technology in these, so it takes some learning to understand, what is the technology, how do I use it in the best way? And the other part is that they're collecting a large amount of data. So it's understanding, if you do a yield map, there's a lot of data involved in there. And then you have to match that with, say, your soil maps and determine, where things went wrong, how can I improve it? But if you have a large number of fields, there's a lot of data, a lot of things to analyze, and so it can be kind of difficult to figure out, what actually went wrong. And so it's understanding, one, the technology, and then two, figuring out how I can use it in the best way.
So how's Extension helping out with this problem?
So we have a lot of things that we go around. We teach people about these different technologies. better ways to use them. We do a lot of things with soil moisture sensors, especially over in the Delta region. So teaching producers how best to use these. And then we have production budgets that we put out that kind of collects data that farmers can then use when they gain all this information from these precision ag technologies. They're gaining all this input data, all these cost data that they can then put it into a budget and then analyze it and figure out, where's my break even? What price should I actually be selling at? Because that's the whole idea of these, is that we collect more information on our cost of production, then we get a better idea of here's my break even, here's where I should be selling, so that you know where you're going to make money and where you're not.
And that's it for a deeper look into the markets. We'll continue our discussion of ag tech next week.